Hello, everybody. Welcome to the Samo podcast. I have Brian with me here, and we're going to talk about very interesting stuff going on in tech now, VC fundraising, and how it is in 2026. We're going to try to cover a lot of the questions that a lot of founders personally ask me. And no one better than that, than the expert in that matter, Brian. I'm going to let you introduce yourself.
Hey, Cisco, good to see you always. Always happy to be here. I am an investor. A VC is somebody that takes other folks' money. We invest our own money, build liquidity inside the dojo, and then invest that money into startups. We've invested into about 266 startups at this stage. I'm really pleased with how it's going. We're looking at around 10x on the initial investment that we've put in. We put about $26.5 million in, and that's tracking at around 300 right now. And yeah, we find startups all over the world, Latin America, Africa, India, the United States. And then we invest in them, we work with them, we build growth into the companies, and then we invest in them again.
That's right. Yeah. So in Santa Monica, I like to go to the expert dojo. There's always things to learn there. And definitely, I learn a lot there. So I'm happy that you guys are in Santa Monica and that I can go to the events that you guys host.
Thank you,
And
man.
also being part of the Brain Trust as a partner is great too. I get to talk with a lot of interesting people, founders, and see what the problems that they're having are. But now, so let's dive into it, right? How has funding from your side changed in 2026 now, right? Is it different? What do you think are the biggest changes?
Okie dokie, straight in with the money question. So, so first of all, venture capital is the most aggressive and risky asset class that I know. I'm not including crypto because I don't really see it as an asset class. I do see it as a good way to make a wee bit of cash. But when we look at like very institutional, traditional asset classes, venture capital is number one as far as risk. So you should expect a really good return when things go really well. And the problem over the years is those returns haven't been coming through. And especially since 2020, maybe 2021, the liquidity events have not been coming either. Fewer companies are going IPO. There's less liquidity in the market. It's just harder for the entire thing. And so for me, I think this year has really just been a reflection of what happens in all cases when there's a huge amount of pressure on something, then it explodes. And so this year has been that year of explosion. Now, saying that, the way that LPs and family offices and money allocators have responded to that is that they have put their money into a much smaller group of VCs. So some of the Silicon Valley elites would be getting 90% of all of the LP money that's coming in. So we were fine before and now because we had always had our family office partner investment that we've been able to put into the dojo. But it doesn't mean that I don't see what's happening in the market and how tough it is.
So yeah, so even the people that fund the VCs are being more selective, or they allocating the money differently now, right?
Yeah.
But but when it comes to venture capitals, right, are the venture capitals deploying less capital, or they're
Yes.
being more selective?
Yeah, because it's a trickle down effect. What happens is you have just a very difficult environment where if the venture capitalists are getting less money and fewer venture capitalists are getting the money, then they're going to put that money into a much smaller group of companies. So a lot of the early stage founders are finding it much more difficult to raise pre-seed rounds, seed rounds, and definitely seed extension rounds. And the only real solution that any company can have for this right now is just growing very, very quickly.
So growth hacks, right? Like growing fast and showing tractions, pretty much.
Yeah. And there's like four areas in growth that I see. Number one is transformative product. Like you have to build a product that transforms your customer, period. Number two is your branding and your messaging. So what product that you have and how are you getting that message across to consumers? I have seen plenty of times best products lose because the brand is inferior. And so branding and message is big. The third one is every company needs to be a media company first and a product company second. That's everything to do with your SEO, with your messaging, with your social, and really with how other people see you online, which requires a lot of work, a lot of what you're doing here, Cisco, with getting these podcasts out here. And then the final part is your channel marketing. And that is what you pay and where you pay for it. And you pay for everything. Nothing is free. Sometimes it's time, sometimes it's a little bit of money, and sometimes it's a lot. But every single thing has got to be built out.
Right. And now you mentioned the different stages of a startup, right? So pre-seed, seed, series A, series B, C, D. How likely is somebody to get pre-seed or seed funding these days from a VC?
So it depends on a couple of things. So, number one, it depends on who you know are, as a lot of folks who are tuned into the world today would say, who knows you? So if you're known by a lot of people, it doesn't necessarily mean that you've had to exit a company. If you've exited, it's much easier. But even if you haven't exited, it might be that you're a leader in a community. You got to know, like before I raised any money, I took over this location in Santa Monica. I arranged tons of events. I brought in tons of investors. And then finally, I met my partner because a local private banker introduced my partner to me. And so you got to work your tail off to be able to do it. But I was known at that stage by a lot of people. So first of all, it depends on who knows you. Second of all, it depends on like how huge your product is in the world of venture. So folks that are building for space, there's a very specific market out there for space investment. A lot of people who are doing it. See, if they see it's big enough in space, then you could find that there's like a really good opportunity to be able to raise money on that. The other piece is the traction, what your customer is saying about you. It might be that a lot of people know you, but maybe you haven't launched the product yet because maybe you need to pay for development, which you have to raise money on, and a bunch of other things as well. And so that brings you back to you got to find investors who are happy with the first piece. But then again, when I got our main investor here, like we hadn't been deploying, we'd been doing venture studio companies. So we had a good message, but we didn't have like the greatest message, but we still got it in. So there are a lot of folks out there. If you have the traction, i.e., proof of product, if you are known by people, or if you are putting yourself in like a really good position in the local community, then you're a good job. You have a good job of doing it. And obviously the success just adds on the top of it. Now, let's say you don't have those things. Well, good news and bad news. Do the bad news first. It's going to be hard and you're going to need to outreach to a lot of investors. The good news is there's an investor for everybody. I remember I mentioned to you before, there's a chap here, Duncan, who built a product which was called the Veggie Dome. And like we don't generally deal with those now, but at the beginning we definitely did. It wasn't really a venture backed product, but it was a guy who was looking to build, and we liked the guy and we liked the product and we liked that he was trying. And the whole idea was just like a cookie jar, but for vegetables. And so he needed to produce the first batch. He got some money from family, a little bit. He was not a wealthy guy, but he had access a little bit to family. Then he got a little bit more money. And then he and I started, and we started helping him with a crowdfunding campaign, but he needed money for the crowdfunding campaign. So he went through all of the people that he had worked with in his entrepreneurial life, ran out of people. Went through all of the people that he had gone to college with, ran out of people. Went through all of the people he'd got a job with, ran out of people. Then we went back to, I believe, high school, and it might have been high school. It was at the high school or just before that. And he found a guy called Beaky. And Beaky was a dentist that was either divorced or widowed, and he had money, and he really cared about the subject of kids' teeth rotting because they're going after cookies. And so he gave him like a lot of money, 7 digits, I believe, to help him develop out the product. And so Duncan just looked further than most people. Like the difference between, oh, there's no one to invest in me, and I just raised enough investment to bring in thousands of veggie domes, was literally the fact of high school as opposed to college, as opposed to job, as opposed to family, as opposed to people he knows right now. And so the final piece is that there are enough people in the world. There is somebody out there who would finance anything that's looking for financing. You just have to make sure that you get to those people. And there's plenty of ways to do that, which I'm happy to share.
Yes, of course, and that's a lot of work, right? As you mentioned, he went through his immediate network, high school, college. That's a lot of work, and people sometimes don't value or don't anticipate for it to be that much work at the beginning. And you mentioned that you have a way to share how to do those outreach. You mind expanding on that?
Yeah. Again, it goes back at the beginning to the message that you have and the presentation of your materials. Some people will just send out a deck. They won't check it properly. There might be spelling mistakes on it. There could be a ton of other things which are not good, but they'll just send out the deck and that's going to be it. And that's not good enough. Other people will like create a beautiful portal which has got this gorgeous story which is written. That's awesome. Now you're getting to the right place. Then you also have to make sure that you're framing the return on investment in a very clear way. People need to be able to see how much money are they going to get back? When are they going to get back that money? And what is the likelihood of getting back the money that they're looking for? They need to see all that stuff in a really clear way. Then you need to say, okay, because again, think about even the form that I gave you at the beginning. Make sure that the product is great. If you have something shitty for people to invest in, then the probability of them investing is much lower and you need to go to much more people. If you have something good, that's great. That's the transformative product. If you're messaging around, hey, I'm doing this movie and this movie is going to feature a well-known actor who's going to talk about his life. Well, you might have to go through 20,000 people to get to someone who's like, I love that actor. I don't care who he is. I don't care what he's done or what he's going to talk about. I'll invest. But if you were to talk maybe a little bit about the fact that the actor is one of the greatest actors on screen TV and has a story about a murder that happened, and that murder is a real life murder that nobody's ever heard about before, and it's going to be released, and it's one of the most notorious rapper, actor, singers, serenaders, mariachis that has ever existed in the entire world, then your story has just got a lot better. And then if they then check about you and see you online, they're like, oh my God, this Brian guy has like produced this movie and this and this and this and this, and he's been successful. And this person is speaking about him and this person and this person and this person, and he's really good. Like that helps as well. And then finally, the channels that I reach out to are important. So you have to follow the same format in all of it. And the kind of channels, though, I love LinkedIn as an outreach channel. I think LinkedIn is great. It really breaks down in a great way the targeting to get the right people to be able to invest into you. Now, I mean, whether it's movies, whether it's anything at all, you can break them down by their title, their company, their loves, their hobbies. You can get, you know, whether they're an investor as well. You'll even have in there as well. Like there's an awful lot that you can do in there. Um, I also like text and WhatsApp. I'm going to do a broadcast later on today to a bunch of folks that we will be looking for investors, and the that'll be a broadcast on WhatsApp with a video, not text, but a video.
Hmm.
I also really like that when you go to events and you're pitching and putting yourself in front of people. I think the more places you can be seen, most of these events they don't even cost any money, but the more places that you can be seen, the better. And so again, that is like really powerful as well. And then you've got referrals and you've got affiliates. And again, the more amount of other people that are either investing money or looking for investment, and you're like, hey, why don't we team up? You send me over some referrals from your people. I'll send you over some referrals from my people. Wouldn't that be a lot better than both of us looking alone all the time? Now take that and multiply that by 10 with 10 other people, and you have yourself something powerful. So there's lots of ways to find people. You just have to do it. But being recommended in is always a preferable way to do it.
Yeah, and something interesting that I think about the things that you just mentioned, right? You mentioned LinkedIn, mentioned referrals, networking in person, and all that stuff. Email, right? So, email, do you think is an outdated way to outreach for something,
It's
or
hard.
what's relevant?
It's not the same as it used to be, 3 or 4 years ago. The problem now is like every email automation tool has already been done. We all get too many emails in every single day. Most people average between 50 and 200. It's just too many. And so most people's objective with email is not to find great opportunities, but to delete email. So I'm not saying don't do it, of course, but just include it as a part of your routine. And a lot of what even we speak about here at the dojo all the time is consistency. Don't just do one email and leave it. Like build a really nice funnel with proper information that's differentiated from the previous information so that people can win.
Right. And so let's say, I want to do a pitch deck, and I want to go to VCs, and let's do it through your eyes, right? So what are the things that you want to see in that pitch deck that you will say, okay, let's talk more about it, and let's see what we can do for you.
So you want to, first of all, see, I mean, look, the very first thing anyone cares about is return on investment.
Return on investment,
That's
right?
what
So
everybody wants.
numbers.
We all want the numbers. It's like if I put $100,000 in or $1 million in, how much money am I going to get back and when? Right. The second thing is we want to see is like, how can you not die? And how can you not die is like, how much revenue are you going to take in? Like, it's pretty easy to work this stuff out because you can see it, but a startup should make it as simple as possible. A lot of the time, what a startup does is they start by just explaining all of the product features and nobody cares. Like the startup cares because they built it and it's their baby, but nobody else. It's nobody else's baby. Like they don't care. You just want to know, hey man, I'm a baseball scout. I just want to know, is this baby going to be A-Rod? And if he is, then like what's the probability and what do we have to do to turn him that way? Like you can show me baby pictures, but I just don't care.
Right.
And so investors just don't care. They just don't care. Nobody cares. They only care about, can you do 200% growth every single year in a market that's big enough with a product which is sufficient and transformative? That's all. And do you, Mr. or Mrs. Founder, have the chops to be able to make it to the end?
Right. But with that, right, so you mentioned return on investment, right? So with that, do you think it's important to have actual numbers, like you deploy a prototype and you have people interested, like a mailing list, or a good funded, market research study will do it?
I haven't seen a market research study in a long time. I mean, the problem is they're just not like, just show me, like, we're all smart people. Like,
Right.
if you're like, hey, for what you do, you're a great developer and you do tons of great nearshoring whereby you bring other developers in. So all I want to know is like, what do your customers think? Obviously, now you're a service company, but let's pretend you're not a service company. Let's pretend you're a tech company. So I want to know, what are your customers saying about you? Like, that's very clear. It's out there. I want to know, like, how are you differentiating yourself? I want to know what is your renewal rate? I want to know what's your increase in growth. Like, if you haven't grown in 4 years and you're like 100% or maybe like 10% growth every year, then I'm not going to believe that you're not going to do 10% this year. And everybody uses money as the excuse. It's like, oh man, if I had more money, I'd be able to grow faster. I was like, really?
Hmm.
You sure about that?
Right. So, getting feedback from your customers means that you at least have an MVP out. Right.
Yeah. And I'm not crazy about the term MVP. I would rather lovable product because lovable product can get better and better. I don't like minimum viable product. It's just a very developer's just description of something that's kind of inadequate for anyone. And it's kind of saying to the customers, listen, take this shitty thing and then we'll give really good stuff to the next customer. And I don't want to be the guy who gets the shitty thing.
So that's interesting. So you're saying like even the initial product needs to be
Lovable. It doesn't need to have all the features, but it needs to be lovable. Like if I'm going to give you a product, if I'm going to make a frame with a picture on the front of the frame, like it doesn't need to be the frame where I walk into you and say, you can have it in green, or you can have it in turquoise, or you can have it in orange, or you can have it in yellow, or you can have it in pink, like, and show you all of those things. Like you don't need that. We don't have that yet. But you might say, look, you have this one here, which looks great. And if we do different colors, we could actually just make it much better. I'll happily bring you in other colors next week. But right now, I have this one color, which I think looks amazing. And then you know what it looks like. That's not a minimum viable product. That's a lovable product, which just has one color so far.
yeah. Yeah, and yeah, and to build that lovable product, right? Like the first iteration and all that definitely needs to be bootstrapping, or if you only if you have angel investors, family and friends, right?
Yeah,
Is
I
that
mean, if you
is
can raise money, good luck. If you can't raise money, then you just build it out anyway. Like you bring in a partner, a colleague, an expert, co-founder, something that can build it. And if you can build it yourself and you can raise a little bit of money, then you do that.
right? But what you've been seeing more lately? You've been seeing more of self-funded, bootstrapped companies, or you
Uh,
angel investors actually writing that first check?
Not sure. I kind of see all of the above.
Hmm.
People are talking about solo founders changing the world. I see a little bit of that, but not much. I don't see a huge change in the construction of teams, and I don't see a huge change in the construction of investment. I see a lot of people trying to raise investment for a lot of companies that they want to be able to make really big. I see, a lot of folks who maybe they can't raise money or they don't want to raise money, that they don't focus so much on that. Like I think everyone to themselves. The most important thing for a venture backable startup is that you're growing at 200% a year. It's the most important thing. If you're
200.
at if you're at 170% a year, well, don't beat yourself up too much, but you want to be aiming at 200% a year.
Right. So that's the kind of traction that you need to show in order to get something from a VC at this time. That's really good information, I think. Okay, and um, I have to go into our services, right? Like
Hmm.
Samo, for example, right? And we do nearshore engineer service. We build a team nearshore for you in Latin America, right? And I think kind of like what you said, right? Like startups don't die because bad ideas. They run out of money because engineering costs or their marketing they couldn't get right. So, do you think nearshore is a good tool for companies
Yeah, of
at this
course.
stage?
You need great developers. You need to keep the cost down. It's a form of financing in many ways.
Yeah, 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 yeah. And is that normally? I know I has you know help a lot of people, solo founders, get initial products out. Do you think a non-technical founder can deploy something that people actually use, or have you seen that?
Yeah, it's hard though. It's like an amateur building a race car. Like, the thing is with AI these days, you can obviously build a lot more than you used to be able to build, and that's cool. But it's still a race car engine. And so you can build basic, but like basic, it's very hard to make basic a multi-billion dollar company.
Yeah, that's true. So there's domain expertise that you still need in a lot of these things. But going back to getting funded, it's AI a requirement for you to invest in a company?
No,
No.
customer transformation is a requirement. And so I think AI is pretty much in everything now. I think it's like saying, God, I remember years ago, people would always say, I need AI. And everybody would be like, well, we're AI. Okay. And so, yeah, look, you just need transformation. Like to build out, when you buy a house, yeah, you need cement and everything because there's tornadoes, but you don't need it in the flower bed and you don't need it in the garden to put the trees on top of. And you definitely don't need it under the swing. So I think that like depending on the complexity of what you're building, there would be a certain amount of AI which is built in already. But the bigger thing is going to be like, what are you going to build around that? That's going to be like super important for the transformative impact for the customer.
Right. And going back to something that you said at the beginning, you mentioned social media, right? You said like make sure that you have presence, right? People know who you are. Um, how big of a factor is it for you to invest in a company when it comes to let me see their
And not big because our companies are very early. I remember in crypto when crypto got really big, everybody with like the Twitter following and based literally a whole funding round on Twitter, which was like our X, which was like super bizarre to me. For me, everything is just really about building out just great product and having the customer being transformed from it and being able to demonstrate that, and also showing that the cost of that the customer friction is very low to buy and that the market is very big. That's kind of the inverse equation that you're looking for.
Cool. Well, yeah. Anything else that you would like people to know when it comes to the environment now for startups? Are you optimistic? Are you pessimistic? Want them to come and look for you, or uh,
Yes, people
yeah?
can always come to me. So a couple of things. Market overview. It is on one side of it a great market. SpaceX have gone public, lots of liquidity in the market, like private markets, not public markets. A lot of people lost money in the public markets, but not in the private markets. Anthropic going to go public, OpenAI going to go public. Everybody very excited about what's happening. You also have a lot of money being funneled into very few companies, which means it's a scary time in the market. So if you're a founder, you have to work 4 times harder to be able to bring the money in. If you're an investor, exactly the same. Everybody, and I mean everybody, has to bring in exceptional returns to be able to get investment put into them. Like I said, we've just been very fortunate that our thesis has allowed us to get really good returns. We always buy in at the lowest price. We always get the lowest Series A price, and we always get the lowest private equity price. We also have the best people servicing some of the highest value customers, highest value clients, our investments. So that means that we're in a position to go really aggressive and get better returns on bigger deals than anybody else is able to do. So I love the space right now. I love venture right now. I love the innovation right now. I love the fact that everybody's looking at space, everybody's looking at AI, everybody's looking at data centers, everybody's looking at the entire infrastructure about how the world is going to turn in the next 6 to 12 years. And from our side of it, like, we're very confident and very determined that we're going to be a central.
Amazing. And lastly, for testimonials, what has been your experience working with Samo Technologies?
Yeah,
All
you're great, Cisco. I love how you focus on quality and cost. Right now, there are good developers out there, but they have been snapped up by folks that are, they're trying to put them out just to the highest bidder. And you kept going, you keep having people that you can bring over whenever they're needed, and the quality is excellent. So nothing but high praise for you, my friend.
Thank you so much. And also, Expert Dojo, I think, is one of the best startup places in Los Angeles and California, probably. So
Awesome.
I think we're fortunate to be in where we are right now, Santa Monica. And it's always a pleasure to talk to you and see you in person, of course, in the events.
Awesome. Thank you, buddy. I appreciate you.
All right. With that, we're going to wrap it up unless you have anything else to say, Brian.
Good, my friends. This is better recording, right?
Yes. All right. So thank you, everybody. And we'll see you next time.